Hi, everyone. Today we are bringing on Tim Smith. Tim is the CEO of a newly minted exploration and mine development company that's traded publicly on the NASDAQ under ticker symbol USGO. Now, the goal of this interview and why we're bringing him on is to really get an inside look at the current state of the gold market and hopefully learn more about the key metrics that investors should be paying attention to when it comes to the mining industry. So, Tim, welcome to the show. Before we get started, can you tell the audience a little bit more about professional background in the industry and your current role?
Yeah, great. Thank you, Michael. Really happy to be on the show. Delighted to have the opportunity to raise awareness with your viewers about our new company, U.S. Goldmining Inc., which we launched just recently via an IPO just as recently as the end of April, and which now trades on the NASDAQ, as you mentioned, under the stock ticker USGO. So I'm the CEO of U.S. Goldmining Inc. I have around 27 years, coming up on 28 years experience in the industry. I'm old enough to have joined in the mid-90s and seen gold sink to around $300 an ounce when central banks started selling in a big way. But I managed to stick through it, work for some big companies throughout Australia, building mines, making discoveries. I was there for 15 years in 2010, moved my family up to Canada to take on a great opportunity up in the Yukon, where we made a big discovery called the Coffee Gold Deposit. That was with a company called Caminate Gold. We sold that company for 520 million Canadian in 2016 to Goldcorp. I joined Goldcorp and then in turn Newmont. So I spent 6 years in totals with those two majors, Newmont in particular being the largest gold mining company in the world, as the director for exploration for North America. And I left that role with great excitement to come and join U.S. Goldmining Inc. About a year ago now. I was really excited about the opportunity to come and work on the Whistler Gold Copper project. I could see a ton of opportunity on a really exciting project with a lot of exploration upside. I could just see an exciting opportunity to deliver value for shareholders. Certainly, that's something that's always motivated me, which is delivering value, whether it's making discoveries or advancing existing discoveries through to preliminary economic assessment and then feasibility and ultimately to mine construction. This Whistler asset is one that when I took a look at it, I couldn't see any major issues with it. All I could see was upside. It's a large deposit, 9.4 million ounces total, in a great jurisdiction with a lot of exploration upside.
Wonderful. Let's talk about the current state of the gold market. People on my channel know that I look at things from a technical perspective and also an intermarket perspective. From what I've seen so far, it's just slightly off the May high. The dollar's been on a little bit of a rampage this month. There's always been somewhat of stronger negative correlation between both gold and the dollar. Now, I'm curious to know your thoughts. Is that correlation going to be potentially breaking? Is it going to remain the same? And then what is your outlook? I mean, it could be, and let us know maybe time frame, year, 2 years, 3 years on the current state of the gold market.
Yeah, absolutely. So look, it's been a good year for the price of gold in general so far. Yes, it's been off a little bit in May, and certainly it is encouraging to see that the market is pricing into both the dollar and the gold price the outcome of the debt ceiling negotiations. We all expect that to be ratified in the coming days through Congress. Which I think is a good thing overall for the economy. Whilst gold bugs might say that a debt default would be amazing for the gold price, which obviously we're heavily invested in. I think it's sound for the economy to get that debt ceiling increase so that the economy can continue. But certainly back to gold, as I say, it's been a good year for gold so far. It's been a great time to launch a brand new gold copper exploration company with assets focused in the United States. I would double down on that actually and say that in my experience over the last 27 years, I don't think I've ever seen a setup that looks like it could support a major bull market for gold, such as we're seeing right now. Perhaps we've seen the start of that with gold up over $200 since the start of the year. And if we look back a little further, it's up about $300 since about the end of October, early November. And that current cycle started with some wobbles in the crypto sector. And it continued through the early part of the year, and we saw gold spiking close to an all-time unadjusted high of over 2,050 earlier in April. That, of course, was tied to safe haven buying on the back of the regional bank crisis. But what I'm seeing, when I look at the long-term price of gold, that is unlike some of the recent previous spikes that we see in the gold price. For example, when Russia invaded Ukraine, we saw a spike. At the start of the COVID pandemic, we saw a spike. But now we seem to be sustaining prices around about 2,000, plus or minus $50 week in, week out. Obviously, there are a lot of shorter term economic data coming in, and people are trying to pick and build the price into what they think is going to happen short term. But over the medium to longer term, I think we're seeing this base set at around 2,000, which really sets us up to threaten much higher ceilings as the year progresses. And there's I think the major underlying fundamental for our business in the gold mining and exploration sector being the price of gold. We see a lot of factors which we think will continue to see the price of gold rise higher in the short term. Ongoing geopolitical safe haven buying. We're seeing that central banks are buying up gold big time. Inflation continues to be out of control, which tends to put pressure on the dollar. A lower dollar tends to drive people to safe haven buying. In terms of the store of value long term that gold can bring, and I think investors like to have that diversity in their portfolio. I think longer term, global supply is potentially challenged. We do see reports coming out across the sector that the miners have increased production in the last couple of years. They're able to do that short term, but I wonder how long they can sustain that, because we're also seeing reports that their resources and reserves are shrinking. The majors, their reserves are probably down almost 50% over the last 10 years. They are not making new discoveries. And so we're seeing the largest gold mining companies replacing their reserves by buying ounces. Now, why is this of interest to us at US Gold Corp? Well, we think they will they will want to own our asset at some point. At around 10 million ounces gold, it's the right size. It's in a great jurisdiction in Alaska with great exploration upsides. So it has the right size and the right quality that we think the majors will want to own the Whistler Gold Copper project in their long-term development portfolio. And maybe I'll just finish off, Mike, with a final kind of thought on where gold could be heading. Mm-hmm. But perhaps instead of giving my thoughts, I'll quote Pierre Lassonde, who obviously is preeminent in the industry as the founder of Franco-Nevada, and some would consider the father of the gold royalty and streaming business. He's been quoted over the past year saying that he sees gold heading into the middle 2000s, around 24, 25 over the medium term. So he was talking about 2023 when he said that.
Oh wow.
Longer term, over the next 5 years, he's calling for it to hit anywhere up to $10,000, and over the next 30 years, as much as $25,000. So he's really tying in, this longer term supply issue as exploration discoveries dry up, reserves in the ground dry up. But of course, we're seeing this increased demand, in particular from the central banks that are buying up gold in record numbers. And at the present time, we haven't seen buying like this since the 1950s has been reported recently.
Wow, that's incredible. I've heard countless investors and people say that if you are bullish on gold and you want more juice to the portfolio, you got to consider adding miners, or at least looking into them. Now, from what I've from my small amount of time in the industry, I've also found that they can be pretty tricky to invest in. So being that you are the CEO of U.S. Goldmining, I wanted to know, what are some important information, metrics that investors should be watching or paying attention to when it comes to investing in these miners? I pulled a few up myself and kind of want to get your take, and then also how it kind of aligns with your company. Mm-hmm. One of them being just the market cap, and you're just currently U.S. Gold mining is at about 180 million. Cash in the bank, and if I have this correctly, it's about 20 million. Mm-hmm. And then what the market values your ounces of gold. And if I get this correctly, you have roughly 9.4 million ounces of gold resource equivalent at about $16 an ounce. And then the team that's running the operation.
Yeah, great. Thanks, Mike. Look, good points. maybe I'll just recap a little bit on the asset first of all. So the Whistler Gold Copper Project is an unmined, never been mined resource located 105 miles northwest of Anchorage. We think it's a unique opportunity for investors in the gold mining and exploration space for a number of factors. First of all, in terms of its size, it's around 9.4 million ounces total gold equivalent, and that's comprised of 3 million gold equivalent ounces in the indicated category and 6.4 million gold equivalent ounces classified as inferred. That includes about 70% by volume and by value gold, and about 30% copper. There's a little bit of silver in there as well. The copper component, we think at around about 1 billion pounds total. We certainly think, that's a substantial copper deposit, which provides an additional opportunity for investors who are interested in the critical minerals sector, with the obvious demand for copper being expected to increase with the growing demand for electric vehicles. So, overall, assets of the scale, we think in mining amenable locations within friendly jurisdictions are increasingly hard to come by, and they are, in fact, in demand by the major players in our sector. So going back to the demand side of our thesis, with precious and critical mineral sector industry struggling to replace its production via new discoveries, therefore assets of the size and quality of Whistler will be acquired by the major gold copper producers. So we see a very strong business case in terms of advancing U.S. Goldmining Inc. and its Whistler asset through ultimately to monetizing that via some kind of partnership or acquisition by one of the majors or the mid-tiers in the coming years. And to go back to your comments around market cap and where that sits right now, and in terms of how we value the Whistler resource in terms of the metal in the ground. So yeah, with a market cap currently of about 180, if we back our $20 million of cash out, that leaves an enterprise value of around 160. If we divide that roughly by 10 million ounces, that comes to around 16 million ounces. So that just gives your listeners a bit of a metric to measure Whistler against the rest of the market. Now, what we typically see in the market is that equivalent sized projects, deposits at a similar stage of advancement typically trade for around $40 to $50 per ounce. So we're undervalued in that sense. And obviously our work programs are designed to get from that $16 per ounce currently up to the $40 to $50 per ounce. So how do we do that? We drill, we undertake mine engineering studies, we de-risk the project via environmental baseline studies, and ultimately we deliver on a preliminary economic assessment in the medium term, at which point we see the industry average being at around that $40 to $50 per ounce for high quality, large resources such as Whistler. Beyond that, in the longer term, we see additional significant growth potentially as we continue to advance the project to the next stage, which is the feasibility stage. Now, feasibility is essentially preparing the project ultimately for financing to develop the mine, to build the mine. And when we look across the industry at comparable sized assets, projects at that feasibility stage, we see an average multiple increase up to $100 per ounce. So, that's the average that we see for potential mine assets with a good line of sight through to permitting and mine production. And I want to give you an example of that because this is something I've done a few times in my career now, where I've been lucky enough to be involved in mine development opportunities. And the most recent one, I mentioned earlier that I made a discovery called the Coffee Gold Project for a company called Kaminak Resources in 2010. Now, in 2016, we sold that project for 520 million Canadian to a company called Goldcorp. And that valued the ounces in the ground at $130 per ounce. For the 3 million ounces that we had defined in indicated resources at that time. And, we see numerous additional examples over the past several years across the industry where larger companies have paid well over $100 per ounce for quality ounces in safe jurisdictions. So, I think key takeaways: Whistler Gold asset, great size, great quality. We have a lot of optionality there and how we can drive that forward. in terms of scale and looking at the grade of that deposit. It's potentially a large open pittable gold copper mine in the future. And we think we can add to that via the strong exploration upside. So tremendous upside overall in this asset.
Thank you. So what else can we learn about the company or industry that you haven't told viewers that you want to know? And then we'll close it off by saying, where can we find out more information?
Sure. Okay. So maybe just a couple of things in terms of current work programs and upcoming news catalysts. So we have just announced recently that we've started field work for the 2023 summer field season. We're opening up our camp currently. We're planning to mobilize drills to the property later in the summer. The drill will immediately start expanding and increasing the value of the Whistler deposit, and also testing some of the exciting new exploration targets that we see that we think could lead to brand new discoveries at the property. So, stay tuned for upcoming news flow later in the fall as we start to release drill results from that program. And in the short term, to get more information, we'd encourage people to visit our website. It's www.usgoldmining.us. A lot of great information there. You can hit subscribe to get all of our news delivered straight to your email. You can also get in touch with the investor relations team. They're happy to walk folks through, answer questions. I would also add, please do your own independent research and read the technical reports. I know there's a lot of jargon in there, but I think it is important to understand that everything that I've said today is underpinned by independent technical reports that meet SEC and Canadian regulations.
Tim, thank you so much for taking the time out of your day to come out here and hop on the channel.
Thank you so much, Mike.